Hello, welcome to this session on GST. GST stands for Goods and Service Tax. The GST Act, it was introduced and enacted in the year 2017. GST is the tax that is introduced throughout the country, where we have the single tax structure throughout the country of India. Now let us start with what GST is. The GST, it covers both the goods and services into the tax structure. It is a comprehensive tax structure covering both goods and services. Yes, the goods and service tax, it covers both the goods and services that is being charged under the tax that is levied on the manufacturer. So GST, it is charged at the time of manufacture, sales and the consumption of goods and services at national level. So the GST can be levied at the point of manufacturing or at the time of sales, and ultimately it is at the time of consumption of goods or services the tax would be borne by the consumer. The GST tax is the tax that is paid on the value addition of goods and services, having a comprehensive and continuous set of benefits from the producers or services point, providers point to retailers point, where the final consumer will bear the tax. Though GST is levied at different points, when the same product is being carried out from the manufacturer at the sales point and to the consumer, if it is of the same product, the taxes that are already paid need not be paid again. Yes, only the value that is added on the product, we have to pay the tax on only the value addition that is made to the product. Let's take an example. Suppose if the value of the manufacturing of the product, it is costing around rupees 10 rupees, and at the point of sales it is sold for rupees 15 rupees. So at the time of manufacturer, at the manufacturing, if the GST is paid for 10 rupees, at the point of sales only for 5 rupees, extra 5 rupees the tax has to be paid. So this is the tax structure that is being followed under the GST. Now let us have a look at the tax structure that was existing before the introduction of GST. Before the introduction of GST, there were several taxes that were charged separately for the goods and services by the central government and the state government, where the tax rates were very different for each state under each taxation system. Let us have a look at what are all the taxes that we had. We had luxury tax. The luxury tax, it was charged on the items of non-essential items and luxury items. Entry tax, it was charged when the goods were moved from one state to the other. The entry tax has been taxed. The local tax has been charged by the local authorities and the governments, and the octroi duties, when the goods are moved from one state to the other, they charge the octroi duties. And then entertainment tax are charged by the local government on the entertainment stuffs. And then the excise duty was charged at the time of manufacturing the goods. CST is the central sales tax, where the goods, when it is moved from one state to the other, when the transaction is between interstate transaction, they were charging the central sales tax. It was charged by the central government. And then VAT, it was charged by the state government when at the point of sales. So the state government were charging the VAT at the point of sales. So with this introduction of GST, all these previous taxes, it is all subsumed under one head called GST. And now in India we have GST, that is goods and service tax, throughout the country. And with the introduction of GST, let us see what are all the benefits that we get after the introduction of GST. Yes, the first and foremost benefit that we get with the introduction of GST is that earlier in the previous tax structure, we had so many complex tax structure in which the calculation was very difficult. And one more aspect we had with the previous tax structure, where we had to pay tax on the tax. But after the introduction of GST, this tax on tax concept is removed. The effects of cascading has been removed with the introduction of GST. Let's see this concept with an example below. And then the higher threshold for GST registration. It is mandatory for a business to register under GST only when its annual turnover crosses the threshold limit. Let's have a look at the threshold limit. So the threshold limit, it is 40 lakhs when the annual turnover is more than 40 lakhs in case of the business that is engaged in goods in normal category states, they have to register under GST. In case of special category states, if the annual turnover crosses 20 lakhs in a financial year, they have to register under GST. If in case the business is dealing with the services, if their annual turnover crosses 20 lakhs, they have to register under GST in case of normal category states. And in case of special category states, if the threshold limit crosses 10 lakh rupees, if they are into service business, they have to register under GST. This higher threshold limit eases the process for the small businesses. And the small businesses who are interested, they can avail the composition scheme, where under the composition scheme, any business that has annual turnover less than 150 lakhs in case of normal category states and 75 lakhs in case of northeastern state, they can avail this scheme called composition scheme, where the GST would be paid at a fixed rate on their annual turnover. So from their annual turnover, they would be paying certain percentage as GST. For the service sector, we have 6% of GST to be paid under the composition scheme. And then for manufacturing sector, they have to pay 1% under the scheme. And then next we have the simpler online facility for GST compliance. So with the introduction of GST, the registration process, the compliance, all the procedures are made through online portal mode. This has increased the transparency and also enhanced the feasibility of registration process and the compliance. It is all made easy with the introduction of online mode of doing the stuffs. And then next we have the dual GST model. Dual GST model, with the introduction of GST, we have two aspects where it is differently taxed under the intrastate transaction and for the interstate transaction. Intrastate transaction represent the transaction that are carried out within the state. So when the point of sales and the place of delivery is within particular state, at that time the state government and the central government join together and charge the GST. So it is the CGST, that is Central Goods and Service Tax, along with the state government, that is SGST, State Goods and Service Tax, or the Union Territory GST, that is UTGST, will be charged in case of interstate transaction, where it is equally divided between the state and the central government. In case of interstate transaction, where the point of supply is in one point and the point of delivery is in another state, it would be called as interstate transaction. When two states are involved in this process, we call it as interstate transaction. At the time of interstate transaction, it is not the CGST and SGST that would be charged, it is the IGST that would be charged. IGST is integrated goods and service tax. So IGST would be charged when the goods move from one state to the other state. So it is the central government that is charging this IGST. The IGST would be charged by the central government, and it would be later on apportioned between the state government. The state government which would be getting benefited with this interstate transaction is the destination state. So the state in which the sales is made, only in that state the consumption where it happens, it is that state that will be getting benefit with this IGST. That is, the share of this IGST would go to the consumed state. And then we have the GST common portal. This GST common portal, it is the GST common portal that is maintained by the GSTN, that is Goods and Service Tax Network, is maintaining this GST portal. GSTN, it is a trust that is registered under the Companies Act Section 8. So this GST portal is thoroughly maintained by the GST network. And then in addition to this, we have the GSPs and ASPs. GSPs and ASPs, GSP stands for GST Suvidha Providers and ASPs Application Service Providers, where they join together. They are under the control of the GSTN. GSTN have given the provision of this GSPs and ASPs. They in turn help the medium and large business in collecting the data and maintaining those things in compliance with the GST law. What this GSP do? They help the big companies, large companies, in complying with the GST portal where this GSP would be having direct contact with the GSTN, and they would be providing the information to GSTN. Whereas this ASP, that is application service provider, they would be having the, it can either be ERP system or a web page or an application they would be providing to the companies or the business in maintaining the data, and these information would be provided to the GSPs from ASPs, and the GSPs in turn would be providing this information to the GST network, which would be very helpful in complying with the GST network and GST portal. So now let us have an example of how this cascading effect works. Yes, before the introduction of GST under the old tax system, let's take an example of a car that is being manufactured and sold. So, in case of manufacturing a car, it would cost around rupees 2,50,000, and the manufacturer is adding 20% of profit to the product, that is the car, and that 20% would cost around 50,000, and the total cost of production of a car, producing a car, is around 3 lakh rupees. And on this, the excise duty is added under the previous tax structure, where 10% of excise duty is added to 3 lakh rupees. It is charged around 30,000. So 30,000 would be charged with the excise duty. Now the cost of the product is 3,30,000 rupees. So 3 lakh would be the cost, where we add the excise duty 30,000, and the value of the product now it is 3,30,000. And after this, at the point of sales, it would the state government would be charging the VAT, and the VAT, that is value added tax, at 10%. So this value added tax would be paid on the cost after tax, that is 3,30,000. It gets 10% tax attracted, and then the value of VAT would be 3,33,000. So the final value that the consumer would be paying for the same car, it is 3,63,000. Whereas with the introduction of GST, let's see the scenario where the cost of manufacturing is 2,50,000, and the manufacturer is having profit of 50,000 rupees. So now the total cost would be 3 lakh rupees. With this, with the GST introduction, we have seen that the excise duty it is subsumed, and the value added tax it is subsumed. So all these are removed, and after that we have the GST. So with the introduction of GST, on 3 lakh rupees it is charged at 20%. If in case if it is charged under 20 percentage, we'll have 60,000 rupees as GST. So 3 lakh added with 60,000, the final value that the consumer would be paying is 3 lakh 60,000. Yes, we have 3,000 rupees benefit with the introduction of GST as a consumer paying to the government. So in this example, you can see that the VAT it is levied on the excise duty also. Yes, the tax is levied on the tax also. So this was removed with the introduction of GST. Yes, I hope now you understood what is the concept of cascading effect and what is the benefit that we got with the introduction of GST. Thank you.